I would like to welcome everyone to the LNG panel, the LNG sector panel. We have with us another terrific group of panelists. I would like to thank Giveans from Jefferies for moderating this panel, and I would like to welcome Tony Lauritzen from Dynagas, Iain Ross from Golar, Oystein Kalleklev from Flex LNG, and Paul Wogan from GasLog and GasLog Partners. Great group of panelists, and Randy, the floor is yours. Again, thank you to everybody for joining us for the forum and for this panel.
Great. Well, hey, yeah, thank you, Nicholas. As Nicholas mentioned, my name is Randy Giveans, head of the Energy Maritime Shipping Equity Research team here at Jefferies. So obviously, Nicholas already gave the introduction to our star-studded panel here of the top executives in one of the most exciting industries in the world, LNG shipping. So we'll start the panel with a little bit of background information, discuss some of the industry drivers, and then look at each of the company's strategy, and then have a little bit of lightning round at the end for some hot topics. So before we, I guess, discuss the outlook for LNG carriers, I think it'd be somewhat beneficial to talk about where the industry has been over this crazy last year, right? Obviously, rates fell to terrible levels in the summer and then have roared to record highs here just as a month or 2 months ago, as LNG spot prices also reached record highs. So starting with Paul, if you can kick it off, what were some of those specific reasons that maybe caused the rate collapse this summer and then caused the incredible rate rally that we saw this winter? And I'll show some of the rate levels here. But Paul, start us off here. What happened with rates?
Yeah, thank you, Randy. Well, I think what was interesting, we've just been through the year of COVID, and if you look at LNG demand, it was actually up slightly, only 1%, probably, 4 or 5% below where we expected it to be, but, it proved incredibly resilient when you compare that to crude oil, where we saw, 10% demand destruction. So I don't think it was surprising that given the new capacity coming on, we saw some shut-ins in the US Gulf. So if you look at this year, you have a fairly good start to the year, then you have a low point, and you have about 120 shut-ins in the US, and you have rates for carriers falling. What's interesting is if you look at how many spot cargoes were fixed this year, spot and short term, that was up around 50% on 2019. So still a lot of volume was being moved. And actually, the market was much tighter than people realized at that time. And we were just chatting just before we went live, and Tony made a very good point. What happened? We had a cold winter. Hey, guess what? Winters are normally cold, and that's all it took to show where the real tightness was in the market. And we had a cold winter in Asia, cold winter in Europe, and you saw the rates going up. So my personal view is that this LNG shipping market is much tighter market than people are realizing. You don't need much to move it. So that for me is the story of the year.
Yeah, absolutely. And then, obviously since the record high in mid-January, rates have pulled back, right? They're back down to 40,000, if not slightly below. So that brings me to kind of 3 important questions. So first to Iain, what has, or maybe has not, right, happened in recent weeks resulting in the collapse of rates? Is it inventory levels? Is it purely based on weather, LNG prices? Kind of shed some light on what's happened here in the last 6 weeks?
Thanks, Randy. Well, what has happened is really the normal post-winter market drop, the seasonal trend where backwardation of LNG prices drives the charterers to discharge their cargoes as soon as possible. And the extreme demand for cargoes this winter, as Paul just alluded to, took all possible divertible shipping away from the Atlantic, which is now discharging and coming open in Asia. So what has not happened, I suppose, is the maintenance of balance of ships in the Atlantic and Pacific basins. And, it's become more imbalanced than usual. And I heard today that Portland are reporting 15 to 20 ships currently idle, promptly available in the Pacific.
Wow. Okay. And then over to Tony. Is the LNG shipping market perpetually going to be tied to the underlying price of LNG? Obviously, when you saw the very high JKM and Northwest European prices in January, you saw very high shipping rates with that ARB. So is that just going to be a perpetual link there between LNG shipping rates and prices? And then where do you expect rates to go from here and into this summer?
Thank you, Randy. I think that's a good question. Look, it's a difficult one. I think that there will always be a link between LNG prices and shipping rates. Shipping rates is a fundamental, cost, part of ex-ship LNG. So, if shipping rates are up, that will affect pricing. What is difficult to say is sometimes is it the pricing that is driving shipping rates or vice versa, and that is up for discussion, in the future. But definitely, I think that there will always be a link there. But I think that LNG shipping compared to crude oil product or dry carriers is somewhat underdeveloped, because what we tend to look at. You mentioned now the arbitrage between the JKM and European prices, and we look a lot at that. But if the LNG shipping market was more efficient, you wouldn't probably have those arbitrage opportunities lasting for months. So I think that signals that there is work to do on the infrastructure side. I think that when there will be more global production, Middle East producing more, for example, I think that these arbitrage opportunities will not be as long lasting as they are today. They will be present from time to time, but it will be a slightly different way of thinking about it. And where do we go, from here into the summer? To be honest, we came from a fantastic market into a pretty dull one. I think is going to be weak, into the summer. But thereafter, me personally, I'm pretty optimistic. As we pointed out earlier, the main reason for this historic highs that we saw was that it got cold. Why shouldn't it be cold, the next season? And I think on top of that, in particular, it got cold in the Far East. The Far East is an interesting market because it's the biggest market combined in the world. It has a lot of pull on vessels. And I think this upcoming winter will be a special one because it will be the Olympics in China, in Beijing. It will be important that there is a clean environment there. I think we'll see the standing down of coal burning and upping gas, and also making sure that inventories are ready to keep everyone warm. So I'm pretty optimistic beyond the summer.
Okay. And over to Oystein, or Einstein, as you like to be called. How can the industry kind of reduce or even offset, some of this intense volatility in rates? We see seasonality in all the shipping sectors, right? But LNG is by far the most extreme. And also, are variable rate charters, something we've started to see here in recent quarters, going to fully replace the 1 to 2 year fixed rate time charters going forward?
I'm not sure if it's the most volatile shipping segment. Of course, 2020 it was very volatile, where rates went down to less than 20 and then to 350. So let's say 20 times change in the freight rate level. But that also, there was also a 20 times change in the price of the product. So JKM going from 1.8 to closer to $40. So it really reflected a very special situation last year. So usually you don't have as such volatile market, but there is a general volatility. There is also seasonality, and of course, as Tony mentioned, it's not that developed as a spot market. Paul also mentioned the fact you have 50% more spot transaction in 2020 than 2019. That illustrates that it's a pretty new segment in terms of spot market. And then storage levels, if you look at oil and other kind of commodities, storage level of that commodity tend to be much more developed than what is the case for LNG. And LNG, you have pretty good gas inventory levels in US and Europe, but that's pretty much it. So how can you cope with volatility? I think, the easiest answer is just to do long-term charters, and then this is somebody else's problem. How we have done it in Flex, given the fact we haven't seen good enough value in doing longer-term contracts, it's been a mix of different things. We have done some slightly longer contracts, some fixed term charters typically like 12 months, some in variable hire contracts, as you mentioned, both 12 months, but even one being as long as 5 years minimum. So, and that's kind of reduced our volatility. And then also when you have a pretty firm market, you try to build some extra period in those markets while you kind of just bite the bullet and do short when the market is soft. So if you look at the volatility of our time charter equivalent earnings, it's pretty, stable throughout the year. In 2020, we started off at 67,000 in Q1, and then Q2, Q3, which was, terrible times in the spot market, we averaged 47,000 both those quarters, and our spot, cash break even is like 45. So, but when we are at 45 with these kind of new ships, the steamships are losing money. Yeah, so, and then as the market improved, we went to 74,000 in Q4. So it's not that volatile in terms of our trading results. And then, of course, we have guided higher in Q1 this year, where we said revenues will grow from 67 million to somewhere around 80, 90 million in Q1. So that should push up the trading results for Q1. And then they will go down again in Q2, because now the market is soft. It's week 9. If you look at the 10-year historical average, the bottom of the market is in week 11. So we are now kind of all those ships that Iain mentioned, which are around in the market now, a lot ended up in Asia. Somebody has to bite the bullet and go back to Atlantic. Sure. So they are willing to do that pretty cheap, because you need to rebalance the market. Now you have had a huge pull to Asia. So now you will need to pull a lot of cargoes from US into Europe, where the inventories levels is down to 36%. So while at the same time, last year we were at 60%. So this gap is 17 million tons. That's more than the cargoes being canceled in the US for the whole of 2019. So there's a lot of these cargoes that need to be going into Europe. That will drag the shipping demand into Atlantic. And if you have a ship in the Pacific, then that ship has to move into Atlantic, and there's not really cargoes going from Pacific to Atlantic.
Sure. All right. And then moving away from more seasonality factors, right? Just looking at some of the long-term demand drivers. Clearly, rate volatility this year has primarily been caused by volatility in demand. So a few questions around demand, right? After many years of numerous large LNG liquefaction FIDs from 2012 to, let's call it 2018, there's been a relative lack in recent years, other than the Qatar expansion. So Paul, what do you make of this lack of maybe the large LNG liquefaction FIDs recently, and how will this affect the LNG shipping markets going forward? I know in your presentation you had.
I just mentioned, since you called me Einstein, don't forget 2019. That was the best market in FID ever. You had more than 70 million tons in 2019.
Yep. So looking at 2020 and then to today. So Paul, can you touch on that? Here's your chart showing some of the new LNG liquefaction coming.
Oh, I remember that one well from our earnings call. So thank you for that, Randy. Yeah, I mean, I think what's happened, again, going back to 2020, year of COVID, and there was a general view that the LNG market was oversupplied. The demand held up, I think, better than most people thought, but still people put off FIDs. And I think it's pushed back FIDs 18 to 24 months, to be honest with you. But what's happening is you're seeing the LNG commodity market balance much more quickly than people thought. This winter made people realize, actually, we thought that maybe the market for the commodity balances in 23, maybe 24. Actually, we're pulling that right forward to 21, 22. So I think there's a real drive now for people saying, actually, this market's going to balance and potentially be shorter much more quickly than we thought. But still, there's going to be a hiatus of new projects coming on, because we've had this sort of, 12, 18, 24 months where we haven't seen a lot of new capacity additions. We have got the new Arctic project coming on. Hopefully Mozambique comes on, but of course there is some political issues there with terrorism, etc. And then the Qatar is coming on. But I think that's pushed back into 24, 25, 26 type of time frame. So I think what we have to do as ship owners is not rush out and build ahead of that, which is what we normally do, let's face it. and actually wait until those new production's coming on and have the ships ready for that point, rather than 1 year, 2 years earlier and be flooding the market. But I think in the longer term, we continue to be bullish on new liquefaction production coming on.
Okay. And then Iain, I'd like to get your comments, obviously on FLNG, with Golar being so active in that industry, as well as some comments on the other side of the LNG shipping market, the regasification capacity. There's some new regas capacity additions set to start in the coming years, but will it be enough to soak up the new LNG supply? And also, where do FSRUs fit in the equation? So here's some of the regas growth.
Okay, Randy, thanks. Quite a bit in there. Let me address regas and FSRUs first. So I think there's ample overall regasification capacity to soak up all the supply. The amount of regas capacity under construction in 2020 reached a 10-year high, with around 144 million tons per annum being built, which is dominated by China and India. And this includes 33 terminals under construction, totaling just sort of around 90 million tons, and a further 50 or so tons per annum that could be added to existing terminals. However, on the demand side, it's going to depend on the choice of energy mix, which will be impacted by a number of factors such as price, politics, and weather. And price is often dominant out of those three. The positive trend for LNG carriers, though, is that the distance between the new production, largely in the US, and in incremental demand in China, that link is increasing, and we're seeing additional and new markets opening on top of that. And that major energy importing countries such as South Korea are opting to transition more power generation to gas away from coal, perhaps requiring more LNG imports. So FSRUs, they'll continue to be the fast track and lower cost entry for new locations that want to become LNG importers. If we think about the best way to solve the supply demand dynamics in favor of the LNG industry, is to create that additional demand, whether that's from LNG fuel bunkering, trucking, decentralized power generation in support of renewables. If you create that demand, the supply and logistics have to follow. If I then turn to FLNG, I really think that FLNG is starting to come of age. And Golar, we think that LNG can be produced for around $3 per MMBTU FOB, West Coast Africa, using one of obviously our floating vessels. And with the spread between LNG produced off West Africa and the forward LNG curves, with that spread approaching $3, we're back in a buoyant upstream market. And our unique and innovative floating LNG solutions can monetize on a cost, schedule, and carbon competitive basis these stranded gas assets, associated gas and reinjected gas, and really turning what's essentially a waste product into a fuel that can displace these more polluting and higher carbon content fuels, which is coal, HFO, and diesel. I mean, LNG is a really firm and fundamental place in the energy transition, but with these FIDs that we've talked about, you've got to be able to move quickly to capture the opportunities. And that's in an industry known for taking a long time to make decisions.
Sure. And Tony, if you could add on to some of that, with LNG being a transition fuel, right? Do you agree with that term? And how long do you view LNG as a kind of a long-term fuel option? And then how will demand for LNG as a bunker fuel for the other shipping sectors? We've seen it for VLCCs. We've seen some large container ships going dual fuel. How will that impact the overall LNG market?
Yeah, thank you. Well, if I agree with the term, the transition fuel, to be honest, I think it's a strange one, because it immediately asks the question that you go into what's the next step? So of course, I think what most people think about is renewables. But when you think about an energy source, of course, emissions is important, but scalability, regular supply, reliability, is extremely important too. So I think what's becoming clearer and clearer to us here in Dynagas is that we're not talking about gas or renewables or hydrogen. We're talking about it as complementary. So for example, the renewables such as electricity produced by wind and sun is great when there is wind and sun. For the other times, you need something else. Now, a modern gas-powered power plant has the benefit of being very reactive, just like your barbecue in a way. You switch it on, it's up and running. I think the most modern power plants are up, supplying the electric grid within 2 minutes from you start the button. And that's what you need really to complement to the renewables. You need a reliable, scalable source that is there when you don't have the cleaner alternatives. So I don't really think about it as a transition fuel at all. I think about a complement to the renewables. And of course, one thing is what the targets are for 2050 and so on. Another thing is what is actually doable. It's great to put targets, but it's also good to have technology that will allow us to get there. And for your second part of the question, how do we think that the marine sector and the use of and the application of LNG in that sector will affect the or impact the overall energy demand for that? To be honest, not very much in the beginning. I think it's a very interesting sector. I think there are 90,000 carriers in the world. If they all switch to LNG propulsion tomorrow, obviously that will be fantastic, but it will take time. I think it will take decades until we get there. And then the question is, why would you have a vessel transporting crude oil running on LNG? There is a paradox there. Or if we take it even further, why would you have a coal carrier, running on LNG? So, since global, since greenhouse gases, coming from shipping is around 2% or so, of course, there are other more important, emitting sources to deal with. But I think that the most imminent demand for or demand growth for LNG is for power generation and for industrial use and commercial use.
Sure. All right, now switching gears to LNG supply, right, and shipping supply, starting with your respective fleets. Obviously, the LNG shipping technology seems to improve pretty much every year, with now a trifurcated market currently. So, Oystein, as Flex has the newest LNG fleet in the world, all of which are the large 174,000 cubic meter vessels, how much of an advantage does this give you? And are your TCE rates and utilization that much higher than your peers because of these new large carriers?
Of course, we had 60,000 on our fleet last year in TCE, so of course you can compare that and you can find the answer yourself. But I think it's more related. Of course, it's a bigger, more efficient ship, so the kind of the fuel consumption compared to our steam is like 60% less. And then that's kind of our commercial impact, of course, for how much you can pay for the freight. And also it's becoming more an environmental issue as well. And especially when it comes now to the new regulation, which we do expect to come in place by 2023, which is the EEXI, energy efficiency for existing ships. So, usually we have had rules for fuel efficiency for new ships, but now we're going to have that also for existing ships. So those ships need to meet certain criteria. And in 2008, that's the baseline. By 2030, down by 40%, down by 70 by 2050. So in 2008, all the ships were steamships. And to get those carbon emissions down to 2030 by 40% is not very easy, because those ships are pretty slow and you have a boil off, you have to manage that boil off. So I think, it's having advanced ships means that, a lot of these older ships coming off contract, people would like to have newer ships to replace those, and then having new ships will put you in a position to also build some backlog. And And so you have, if you look at the kind of the scale of the ships, you have the steam ships and the tri-fuel and Q-Maxes and the hybrid ships. So you have the most efficient ships. And I think that will put you in a position to build backlog and take down some of the volatility in your earnings. And really, our kind of ships, they are too nice and efficient to be in the spot market. And it really more belongs to less efficient ships, especially, when you're talking about shorter. So okay. I think that's the main benefit of having the newer ships.
And then Paul, GasLog Partners, they operate some TFDE ships as well as some older steam ships. Will there be a market for these smaller, as Oystein said, less efficient ships in the years ahead, or will all the steam ships get scrapped or repurposed in the next 3 to 5 years?
Well, it's going to be a really interesting market if we get rid of 234 ships out of a fleet of 521. We have a small number of steamships. If that's what happens, we're going to make so much money on the rest of our ships that we're really not going to care about it, I can promise you. So, but joking aside, that is the issue right now. You have, 234 steamships, you have 190 odd TFDE vessels. To replace those is a huge amount of investment. And my question is, who's going to go out and make that investment, given the fact that what's the lifespan of the next generation of LNG ships? If you go out today and you order a ship for 2025, by 2050, it has to meet criteria, which a ship today doesn't. So you now have to write off the new ships in 25 years, not 30 years, not 35 years. So who's going to go out and place those orders for those new ships right now? So I think it's really interesting. I don't think you can get rid of the steamships in the space that in the space of time that people are suggesting. If you do, the market will go crazy. But on the other side, you will actually just put a spanner in the works of the whole LNG commodity market, because the LNG won't be able to move around the world. So I think there's going to be compromises there. I think where Oystein's correct, for the long haul, for the major cargoes, the new ships are great. We've put 3 of our ships on 2 to 3 year charters recently, our steam ships, for niche business, where they're doing some storage, some movement, being part, getting more into the logistics, into smaller ports. So there's still a niche market for those vessels, and I think that niche market stays for a while. But certainly, I think over time, there is going to be replacement of ships, but that's going to take quite a long time. Got it.
Well, yeah, let's turn to the order book, right? So obviously in 2015, it kind of peaked, right, at about 40% here, using my meteorologist. And then obviously it's trended lower, but it's still at around 25% currently. So on the order book, Iain, how is that going to affect, day rates, utilization for the current ships on order? Is the market going to be able to soak up 25% of the order book to fleet ratio over the next 3 to 4 years without extensive scrapping on the older, smaller ships?
That's the question, isn't it? And I think I agree with a lot of Oystein and Paul's comments prior. But bear in mind, we saw only something in the order of 30 new orders through 2020, and much of that's committed to contract. I think Mozambique and the Arctic was mentioned. I think Shell have picked up some for replacements. But the industry is just going through this interesting phase where the steamers are being slowly phased out for these new technology ships. But there's this large order book, as you say, is going to have potentially some repercussions on market sentiment and expectations in the near term. Right. But if you consider this in isolation, it doesn't look great, but it's also too simplistic a way to think of things, because over the next 5 years, so take a 5-year time horizon, that these new builds that are on order, so 140 or so of them coming on order, around 75 of the steamers are coming off long-term contract, many of which we expect to be retired. Obviously, not all of them. Some of them may be repurposed. Some of them, I agree, will go into that niche business environment that Paul talked about. And certainly some of the activities that Golar Power, Hygo, now New Fortress Energy will be doing around creating these new markets. It's perhaps more suited to some of these smaller parcel size and one-off rather than long-term America to China sort of carriages. But that over that period, there's another 70 million tons of new production will come on. And that's going to have a significant impact on both ton miles and therefore shipping demand. So, you know, it's a balance, and I agree that we have to wait and see, but I don't think all of the steam turbines will be retired, but obviously some of them will, and that will put upward pressure on the medium-term fleet. So not the next couple of years, but certainly that medium to term that we've talked about.
Perfect. All right, well, we have about 10 minutes left. So for some of the investors on the line, I want to ask each of you kind of one company-specific question, maybe take about 1 minute each to answer, and then we'll go to the lightning round. So first to Tony, you know, do you still view delevering your balance sheet as the top priority at this point, kind of in the cycle? What are your thoughts on maybe reinstituting a distribution and or acquiring another drop down from your parent here in 2021?
Yeah, thank you very much. Look, the delever of our balance sheet is still the top priority. It is what we've been communicating for the last year or so, and what we are communicating now. But I do think that you know, in the not too distant future, we can look at acquiring more vessels, or you know, either existing you know, from the parent or from the market, or new build. But we are definitely starting to look at new projects in the into the future. But right now, the lowering of the debt is still the top priority. Perfect.
Oystein, you've been very active in deploying capital via new building acquisitions, increasing your dividend, repurchasing shares. As of just a few days ago, I saw another announcement on that. So do you think this kind of balanced capital allocation approach is best? And what are your views of consolidation, knowing that there are certainly sellers of TFD carriers in the market, or are you only wanting your mega ships and XDF vessels?
In terms of capital allocation, we have said once we get all the ships on the water and all our kind of equity is starting to generate income, we wanted to increase our dividends. So we made 45 cents in Q4 and we paid out 30 cents, increased the dividend from 10 to 30 cents. But then we're also buying back a lot of stocks because that's the best investment we can do. So if we want to do consolidation, we probably do consolidation of our own stock. So if we buy our stock, we buy our ship at 160 million. These are brand new ships. We have even one more left for delivery. And they're all financed with long-term attractive debt, and you get the software with them as well. So I think for us, our focus, our ships, buying back our stock, returning capital, certainly not deleveraging. We have put in place a lot of attractive debt, so we don't see any reason why we should pay back that prematurely. And cash balance is sound with around $130 million at year end, and we will add more money to that cash balance through Q1 with our bookings. So.
Okay. Over to Paul. I know you're unable to say anything regarding the BlackRock merger with GLOG, so focusing on your CEO of GLOP hat, right? Following the strategic review, is the partnership structure with GLOP likely to stay for a while, or is that continue to be evaluated periodically? And what were maybe some of the other second, third place options? Are asset sales on the table for GasLog partners?
Yeah, so thanks, Randy. For GasLog partners, I mean, we did a strategic review, and we decided actually we like the fact of being an independent company. We think there's a very good future for it. Just go back to a point Oystein made earlier, which was, at certain levels, this market is loss-making for steam vessels. Of course, the most important thing is how much debt have you got on your ships? If you've got very little debt on your ships, your break-evens go down. And so a little bit like Tony, our view is we are going to take our leverage down in GasLog partners as fast as we can, and bring down the break-evens of the vessels. We think that the growth that we saw this year in the spot market will continue. We think that the LNG market will continue to commoditize. There will still be a lot of long-term business, but there will be more and more cargoes move, more liquidity in the short-term market. And we feel with the size of fleet that we have in GasLog partners that we can be a major player in that spot market. And we see with the timing of the LNG commodity, a very interesting market coming over the next few years, and a good opportunity, I think, for investors who want to get into that spot market. So for us, we see the future very much as an independent standalone company. We see the future very much like Tony's company. Let's bring down the leverage, let's get the break-evens down, and we can be very competitive and very, I think, agile and nimble in that spot market.
Sure. And then to Iain, obviously in recent quarters, you've gone from maybe looking to divest your shipping business to it now being a major portion of your business following the sale of Golar Power or Hygo to NFE. So as such, how do you view this core LNG shipping business longer term? Are you more likely to sell or spin off the business, or are you now looking to grow and acquire some additional tonnage?
Thanks, Randy. It's a good question. I would say that Golar's remaining business now has two arms to it, if you like, or three if you consider or you include our investment in New Fortress, which at 9% is not inconsiderate in the downstream. But essentially, we've got shipping and FLNG. And what we've learned over the last few years is that from an investor point of view, they don't necessarily sit well together. We have people that really want to invest in the shipping market, but they don't like the long-term high capital intensity of FLNG. And equally on the other side, the FLNG investment community really enjoys the high EBITDA generation over very long periods of time, but they don't necessarily want exposure to the shipping market. So with the NFE deals, it's given our balance sheet a lot of support. I think that the crystallization of value that we've been able to demonstrate through those deals gives us flexibility. And it's a case of pushing to, I suppose, figure out a longer term strategy for shipping either inside or outside of the company. And the same with FLNG in terms of accelerating growth there through the initiatives that we've described recently, and seeing if there's an appetite for investment. So what we can say is we will work towards further group simplification, which will inevitably lead to the separation of the two, but we don't know which business is going where. But what we do know, these will make these businesses attractive for their individual and unique investment communities.
Sure. Great. Well, hey, thank you all so much for answering those questions. We have about 3 to 4 minutes left, so it is now time for the lightning round. So keeping your answers very short, we're going to go to each of you. First question, what is your expectation for LNG carrier ton-mile demand growth in percentage terms in 2021? Tony, we'll start with you.
Up 10%.
Whoa, Oystein.
I think 12.5.
Okay, let's just go. Paul, go for it. Give me 20.
Well, actually, I won't go higher. I think you're going to see demand for the product up around about 4% coming out of the US long haul. I think we're going to see something like 8% ton-mile demand growth this year.
Iain?
Well, it was 6% last year, so I'm going 8.5.
8 to 12. All right, 8 to 12. I like it. On the supply side, starting again with Tony, expectation for LNG carrier fleet growth in percentage terms this year.
You mean new orders, or you mean
just net fleet growth, deliveries net of scrapping? So yeah, net fleet growth.
All right, 20 ships delivered. So what is that? 6%.
Okay. Oystein.
It's 54 ships for delivery. I don't think there will be a lot of scrapping, but let's say there will be a couple of. So then we grow 52 maybe 50, and that's, the fleet is like 550 ships, but they are slightly bigger, so then we are 13%.
Okay, Paul?
10%.
Iain?
43 new ships.
Okay, 8%, something like that.
Net new ships.
All right, using those numbers, what's your average TFDE day rate gonna fall to this summer? What's the low? And what's going to be the high in December? We'll go the inverse order. Iain, trough in the summer and peak in December.
A high 153.5 and a low of, I'm going to say 30. But we're almost there now, so that's wrong already.
Right. Paul?
I'm going to say, I think Iain said 153.5, 154, because I think just go above him. And I think we're probably somewhere near the low now in the 30s. Low 30s.
Wow, okay. Oystein, I know you don't have any TFDEs, so don't say 0.
But of course, I don't think we will be at the bottom in the summer either. I think we will be in the bottom around now. And then headline rates are probably 20,000. by October, November, I think they will be, let's say, I say 152 then.
Everybody in the 150s. Paul, Tony, are you going to join them?
Yeah, sure. Look, for the lows, I'm not so pessimistic. I think also that we are at the low now. I think summer will move up a little bit. So I said, okay, $30,000 a day low. And for high in November, look, I'm going to go for 200.
Wow.
Hey.
All right.
First
Or the
time I've been the
positive.
most bearish guy.
Well, there you go. If now is
We
the
should have
low,
asked Maggie's Oystein.
if now is the low and the summer's going to be better and the fall, winter's going to be that much better, sounds like now's the time to buy. So thank you again. Really appreciate it. We covered a lot there in 40 minutes. Nicholas, thanks again for having us.
Well, thank you very much from me to all of you. Great panel, as always. Thank you.
Thank you very much.
Randy.
Thanks, fellas.
Thank you.
Thanks, Nicholas.